It's a reality we've become all too familiar with. As millions of Americans struggle financially, large corporations are seeing their profits and stock prices soar higher than ever before. If elected president, this is how Joe Biden plans to change the tax code and ensure that big business pays its fair share. Hello and welcome to Practical Personal Finance. My name is Andrew Shear, and this is where I give you the information you need to understand and succeed with money. With Election Day now less than a month away, it's time for the second installment in this three-part series on Joe Biden's tax plan. Today, I'll be focusing on 3 of Joe's proposed changes that will increase taxes for the biggest businesses. Before I get started, do me a favor and hit that like button. And if you're new here, hit that subscribe button too. You never know, you might learn something new about money. The 3 aspects of Joe Biden's plan for tax reform that I will cover today involve the corporate income tax rate, the foreign tax rate for American companies, and a special penalty designed to make American workers more competitive. Just like last time, I'll fill you in on how taxes currently work, the change Joe Biden would like to make, and who will be affected. Make sure you stick around until the end when I'll give you my thoughts on whether or not the changes will make things better or worse. First up today is increasing the corporate income tax rate. Much like with part 1 in this series, we're starting with a pretty straightforward change. Currently, the corporate income tax rate is set at 21% for businesses that are classified as C corporations. If you can buy stock in a company, it's generally a C corporation. These are all the large, publicly owned businesses with loads of shareholders. For every dollar of profit these businesses earn, they need to pay 21 cents in corporate income tax to the federal government before distributing any of those profits to shareholders. The corporate income tax rate has been set at 21% since 2017, when President Trump signed the Tax Cuts and Jobs Act. Before that, it was set at 35% ever since the mid-90s. Joe Biden would like to raise the corporate income tax rate to 28%, halfway between where it is now and where it was 3 years ago. This 7% increase will lead to roughly $105 billion per year in additional revenue for the federal government. This change will only directly affect businesses that are classified as C corporations. These businesses will have their profits cut by 7%. If you happen to own shares of a company that pays U.S. corporate income tax, those shares might not go up in value as rapidly as they have in the past 3 years. Change number 2 is increasing the tax rate on foreign earnings of U.S.-based companies. This one is a little bit more complicated. When a company is based in the United States but operates in another country, it gets taxed on profits in the other country first at that country's corporate income tax rate. If that other country has a low corporate income tax rate, then that company gets taxed by the United States on those profits as well. This tax from the United States is designed to prevent companies from moving operations offshore to other countries with low or no corporate income tax. Currently, U.S. companies are taxed at 10.5% on profits they earn from doing business in other countries, minus a credit for some of the tax paid in the foreign country. This tax is called the Global Intangible Low Tax Income, or GILTI tax. Joe Biden wants to double the GILTI tax from 10.5% to 21%, forcing U.S. companies operating abroad to pay more tax on their foreign profits. If enacted, this change will generate an additional $30 billion in revenue every year for the U.S. federal government. This change will only directly affect businesses that are operating internationally. These businesses will see U.S. corporate income tax eat into their foreign profits. If you happen to own shares of this type of company, they might not go up in value as rapidly as they have in the past. And finally, change number 3 is a tax penalty for U.S. companies that produce goods or services in other countries that sell those goods or services to American customers. Let's pretend a company in the U.S. made t-shirts in the U.S. and sells those t-shirts to people in the U.S. A company like that could potentially save a lot of money by shifting manufacturing operations overseas to take advantage of lower labor costs. Joe Biden wants to add an additional 2.8% corporate income tax for U.S. companies that produce a product overseas that is then sold to people in the U.S. That would make the corporate income tax for profits generated from those overseas activities a total of 30.8%. The only businesses who will be affected by this additional penalty are those who have shifted production overseas. The idea behind the penalty is to discourage companies from shifting jobs overseas and instead bring them back to the U.S., thus making the U.S. workforce more competitive from a dollars and cents standpoint. It's easy to imagine how these three changes will increase revenue for the federal government, but it's tough to say what the indirect effects will be. The higher tax rates could push some companies to shift their primary operations abroad to other, more tax-friendly countries. They could also play a factor in determining where new companies form and set up shop. Raising the corporate income tax rate back up to 28% seems reasonable, since it'll still be quite a bit lower than it was just 3 years ago. The tax penalty for shifting jobs overseas also seems like it could have a positive effect on manufacturing jobs here in America. But doubling corporate income tax on foreign earnings for U.S. companies seems treacherous. Not all countries have corporate income tax on profits earned overseas. I'd be interested to see what effect that big increase will have on U.S. companies that operate in different countries. What are your thoughts on Joe Biden's plan to raise taxes on the biggest businesses? Let me know in the comments. If you liked this video, you'll love part 1 in this series, where I talked about Joe Biden's tax plan for the wealthiest Americans. Check it out right there. This series on Joe Biden's proposed changes to the tax code will be back next week with part 3. I'll be discussing how Joe Biden plans to help working class families by providing some tax relief. Make sure you hit that subscribe button so you don't miss out. Thanks for watching. I'm Andrew Scheer, and I'll see you next time.